All right, just so everybody is aware, we will be recording this webinar. If you do not wish to be viewed on screen, please feel free to turn off your camera. We do ask that during the presentation, you do keep yourself muted. There will be opportunities to unmute yourself and ask questions later on. If you weren't able to make it to the first part of this two-part series of pricing for your business, feel free to send me an email at communications@paro.ca. I will put that in the chat. If you also would like a copy of today's recording, again, send me an email at communications@paro.ca. Now I'd like to hand it over to our lovely Elizabeth Fairway. She is a writer, a speaker, and a business mentor, and she's been a PARO BGA for over a year and operates Office Mentors and a women's speaker series called Spoken Lives. So Elizabeth, it's all yours.
Thank you very much, Kylie. That's great. Yes, so this is part 2 of our pricing workshops, and pricing what you sell relates so strongly to your emotional relationship with money. And so you have to better understand your emotional relationship with money before you price your product or service. So I'll ask you to consider if you're someone who finds it easier to give away money to other people or to collect or get money from other people. That answer can guide you to compensate for your natural instincts. So if you find it easier to give money away, you will need to carefully add up all your expenses, even the hidden ones, to make sure that you cover all your fixed and variable expenses and make the money to pay for your time that you're spending with your clients or customers. And of course, all your costs. So we'll go through this in great detail. But before we begin, I need to say that it's always a bad idea to compete with other businesses on price. It's so tempting, but it's no way to build a business that will support you. Each client I work with, and especially women, underestimate the amount of money they spend to bring their product or service to market. There's hidden costs, of course, that we'll talk about today, but you want to be very careful to itemize each cost. So I like to give an example of lipstick, you know, that you can buy lipstick at the dollar store, right? And you can find them online at $500. It's there's a whole range there, and it's what the value you tell your customers that you bring to the table with this product. So you need to think about that as you price your product or your service. Okay, so we're going to just a second now. I meant to figure out this. I think it's this thing I do. Okay, perfect. Okay, so we need, when we price our product, it's strategic. As I said, if the dollar store is selling your lipstick or up to the $500, we need to think about the current economic situation within the marketplace, and of course the competition within the geographic location. If you're selling in the heart of Toronto or you're selling in other countries, you know, you need to consider that and price things accordingly to the market. So, but also remember that 85% of the purchasing decisions in Canada are made by women, and the remaining 15% are usually influenced by women. So we need to take that into account when we're pricing things. Okay, I don't know why okay. So we'll adjust to the market, but only when you have considered all your costs, your material costs, your overhead costs, your labor costs, and of course your image. Know your market, know what's going on locally and globally. I mean, we were having a talk earlier and Jessica knows that everybody's waiting for the bagels in Thunder Bay. So she's probably more confident that this will start up quickly, right? And stay informed on anything that could affect your business, particularly in your industry. So if Jessica heard from one of her customers that there's a new bagel shop or that somebody's going to start competition, that changes things in her marketing and could encourage her to do some special costs, special pricing to compete, right? And the least desirable pricing method, as I mentioned before, well, maybe suggested or the going rate, because it ignores your cost structures and other economic factors, right? The best method takes into consideration all the operating costs, your market and economic factors. So there's several techniques, right? The importance of pricing is critical, as incorrect pricing can result in business failure. And the new business owners often make the mistake of either charging too little or too much for their product. I'll say here that it's always easier to bring your price down than to raise your price. So if you start in the market high and then you give special pricing or 2-for-1 or partner with somebody and do a cross promotion, you can come down in price, but it's very hard to go up. So you need to consider what's acceptable in the market and what your costs are. Of course, both must be considered. Effective pricing depends on the business goals. Do you want to maximize profits, or are you aiming for high growth in sales? Right, that's something you can discuss with your business growth advisor. Profits generally range from 10 to 30,000 of the average salary with benefits plus overhead costs. To determine a fair profit, we're going to consider the demand for your service. We're going to consider the extent of your expertise. Somebody told us that she's a trained silversmith. So, you know, it will fall somewhere in the market in her city between somebody with 30 years experience, somebody with 10 years experience. And, you know, if she's a couple of years experience, where she falls in that range. And also, of course, creativity. She may be more creative than the person who's been in the field for 30 years. So there's a lot to consider. And of course, the competition. You're always keeping your eye on the competition. And I like to call it co-opetition. Of course, I live in a major city. I live in Toronto. And so one day I consult with a lot of business owners privately as well. And oh gosh, it's about 5 years ago now. I had a cleaning company in the east end of Toronto, and a cleaning company started consulting with me in the west end of Toronto. And I suggested that they collaborate to put an ad in the paper, and that they take the east end people take the east end referrals, the west end people take the west end referrals. And there was enough business for both of them. And they just tracked that to see how they would share the cost of that ad campaign. And also it became a real dream come true when one of them wanted to go on holiday, the other one covered for them, and vice versa. So don't look at competition as, it's horrible, right? It can also add to what you're doing if they are also willing to consider co-opetition, I call it. Okay, so the important thing that we're going to talk about today is finding your break-even point. So that's the point where the costs or expenses and revenue are equal to the sales. So you want to, in other words, there's no net loss or net gain. So if your costs equal your sales, then you're at a break-even point. But that doesn't mean that you're making an income, right? So we've got to build that in. But the business has broken even when your costs equal your sales. So that's really your first thing that you have to consider before you price your product or service. Okay, so now we're going to talk about calculating.
Just one quick question there, Elizabeth.
Yes.
We have a question. What do you mean by the profit side example, 10% of salary?
Okay, I'm going to go back to that. Sorry, yeah. I wonder if I have to stop it. It's not cooperating with going back. Let's see. Do you have any ideas, Kaylee, why it isn't going back with my arrow key? Okay.
Oh, there we go.
I've got it with, so pardon me, was it the break-even point is the point at which the costs or expenses and revenue from sales are equal? Is that what we're talking about?
Let's see.
Oh, here, no. Profits range from 10 to 30%. So I don't know why it says of average salary, but with when you take a look at the salary with your overhead costs, you want to have a profit after all your expenses are taken into account. So you've paid everything and everybody, yourself included, and you need to have a profit of, whatever percent you decide, because there's all sorts of unexpected expenses and hidden costs that come up. Does that answer the question? I don't know who asked it, so.
Yep, that answers.
Okay.
Thanks.
Thank you very much. Yeah, please feel free to stop me along the way because I tend to speed through it. Okay, so we're going to talk about calculating the break-even point. The basic technique is the same for all the businesses. You must know your variable costs. These are the costs that, hold on, did I skip a slide? I'm just going to check. No, okay. So we're talking about the variable costs, and these are the costs that vary with how much you sell. For example, costs of goods sold, variable labor, like you might have somebody who's part-time, but if you have more sales, they have to come in for more hours, and sales commissions, and of course, shipping, packaging costs, advertising. Those kind of costs are variable costs. It increases when your sales increase, okay? Sometimes your utilities, you'll use more hydro or, whatever, advertising, of course. And then you estimate your projected sales. How many hours am I going to sell? Or how many widgets am I going to sell? Or how many bagels am I going to sell? And of course, your overhead fixed costs from your projected or your projected sales and overhead costs. And then if you have a year under your belt, you have a profit and loss statement. So of course, that's when things get really interesting. When you have your profit and loss statement, you have all your costs, all your expenses, your fixed costs and your variable costs. And then you have actual sales, so you can better estimate the next year with the seasons coming and going, right? When LA said she was a personal assistant, a lot of seasons are busy for personal assistants and some seasons are not, right? So those variables become evident after the first year in business when you have your profit and loss statement. Okay, so projecting, of course, is a it's a guesstimate, really. I mean, Jessica was saying she's run a couple of bagel shops before, so she's probably very educated in how to project sales. But somebody who's starting out in business, they're at a loss, right? They think, okay, my job, I used to work 40 hours a week, so I'll base my week on 40 hours. And I always say, oh no, you'll be able to bill for about a third of those hours, right? So if you're planning to be in the office working on your business and in your business, you'll probably get to bill a third of whatever you work. So if you work 60 hours, you'll be able to bill for 20. So you need to have a business mentor to educate you on that in that first year. So make your sales estimates conservative, right? If you think you're going to sell 1,000 bagels in the first week, I mean, there better be a big sort of opening day and big splashy sales and what have you, because it takes a while for word to get around. I was amazed, actually, a local store or a chain, the Bulk Barn, opened up, and he was on the Danforth, and I knew the owner, and I said to him, "Where's your promotion, man? Like, you could do so much." And he said, "Oh, head office takes care of all that for me." And the biggest LCBO in the city opened up like across the street, I don't know, maybe 2 weeks before he was due to open. And I'm like, "You should have signs out. Like, you don't even have your sign up. Like, just put some signs out." And he's like, "Oh no, head office will take care of that." And I thought, oh my gosh, like, you cannot do that. You have to, even though, yes, it's a corporate, or not a corporate, it wasn't a corporate store, it was a franchise. But even though head office takes care of it in normal circumstances, there's extraordinary circumstances local on the ground. But anyway, make your sales conservative, and of course, slightly overestimate your costs. So whenever you take a cost, I always round it up, and it might be just to the dollar. If it's a bigger amount, like if it was 115, I would put it up to 125, to the 25 mark, or the 50 or the 75, like round it up so that you're not caught when, the price of gas goes up, for instance. We have no control over that. Everybody's travel expenses are more now, right? So when you're projecting sales, consider how many widgets or client days will I reasonably sell this month? And also consider how many widgets or clients that are reasonable to make or serve. Yeah, there's so many client stories that I can tell you. It's hard to stay on the script, but it really is important to make your sales estimates conservative and slightly overestimate those costs, because things change. While you've got your nose to the grindstone, things change, and sometimes you don't notice or think about how it's going to impact your business. But you have to consider the seasonal. So seasonal, like at Christmas, might be a huge demand for your product, and Christmas might mean that your demand for your service or product really shrinks, right? So you have to think logically about your particular product or service, and consider the economic and other pertinent matters to be more accurate in your projecting, right? And when in business, once you've been in business a year, you can compare the month last year and consider what's reasonable to happen this year or for future years. If you're slowly building on sales, then that will probably continue. If you're building on sales and another competitor opens and you lose some sales, you have to make adjustments to project properly for the coming year. Okay, so calculating your break-even point. I've got some information here that I'm going to give you, but then we're going to move to an Excel spreadsheet that I'm going to share with you after the presentation, because it's got all the calculations put in, and it's a lot easier to work with, unless you have some great math skills, right? The Excel spreadsheet is so much better. So the break-even point, of course, we've covered it. It means that your business has not earned a profit or experienced a loss. All of your costs are covered at the break-even point, right? And so your sales equal the breaking even level of sales in dollars of your product and service. And your fixed costs, of course, examples are rent, phone, internet, insurance, And then you have the variable costs in dollars, which are materials, travel, staffing. And to determine whether your business is at a break-even point, the formula is the sales equaling the fixed costs and contribution margin rate. So we're going to go through an example. Actually, you know what? I might switch to the other one because I think it makes more sense. We'll try this and see if everybody finds it as logical as I do. Okay. Sharing the screen. Okay. So there, if you see at the bottom here, so this is a Excel spreadsheet that when we plug in the numbers here, we can see, this is a service business, we can see if what our monthly break even costs are and what the average hourly rate is and how many hours you need to sell each month to survive. And these numbers will change as we plug in numbers. So we have a service business example. We have a manufacturing business example that takes other costs into account. And we have a retail business example. So Kylie, did you sort of take notes of which one I should start with?
So it looks like we primarily have people in the service
Okay.
industry, but we do have some in the product and manufacturing.
Okay, well, we'll do service and we'll use it as an example, and then we'll share this spreadsheet so you can take a look at all this for yourself. So is there, I don't know, is there a volunteer in a service business that wants to give me some numbers, or is it best for me to just make it up? Anybody want to work with me on this, or should I just make it up?
I can give you some numbers, Elizabeth.
Great.
LA Siegel speaking from Barrie.
Thank you, LA. So
Okay.
monthly expenses on accounting.
Let's
What
put
would-
it, I know my quarterly expenses right now, and they're 170 for the quarter.
Okay, so that would be divided by 3.
Correct.
Can you do that, or should I?
I'm gonna pull up my calculator as I speak.
Thank you so much.
Because I know some of them better than others. So that's let's round it up to $60 a month.
Okay, perfect.
57
And
and change.
what's your advertising?
Right now there has not been any so far.
Okay. Now, do you think that you'd like that to continue, or do you think you'd like to adjust that?
No, I need to adjust that.
Okay, so what would you like to adjust it to?
Even if I could get some printing of flyers and business cards done, I don't know, let's put it at 200.
Well, that's sort of a startup.
I haven't gotten that far yet.
Okay, so I'll suggest that we do like a $30 a month.
Okay.
Because the 200 is sort of a one-time expense, but we're
Sure.
looking at the monthly fixed expenses. So $30 would
Okay.
be about 400 a year, you know, or sorry,
Okay.
360. So bank charges, is your bank at $10?
I think it's like about 15.
Okay.
Some months
Perfect.
it's been about 10, some months it's been 15. So I'm trying to
Yeah,
still
but
figure
it's a great example of, you know, overestimating your costs a little. And what kind of salary would you like to have?
I don't know. That's the part that I struggle greatly with.
Okay, so we'll skip that right now. Do you have any costs with the team members? Do you have anybody helping you in your business?
There's sometimes it's about 150.
A month?
Correct.
Okay. And then your hydro for your business?
I don't have those expenses at this time.
Okay, internet?
I think it's 70, although that's been a conversation in the last couple of days to raise it up to the $100 package
Okay.
because it
And
hasn't been working.
do you travel to your clients?
Right now it's been virtual. However, it will hopefully go back to traveling.
Okay. So in a month, how much gas do you think you'd spend, or, what's a reasonable amount for your gas, and or do you have
I can gas fuel. I can spend anywhere between $200 and $800.
but that's for everything, right? Not just your business?
That's business related. Yeah.
Wow. Okay. Okay, well, we'll put 200 to start with.
200. Yeah, like right now it's not. I don't have those travel expenses, especially during COVID.
Yeah.
Other times it skyrockets. So
Yeah, I can see that. And do you have any ongoing technology costs, like your I don't know, Dropbox, or your website costs?
not at this time. Again, that's something I haven't set up quite yet. I do need to look at buying technology packages. I have like yearly subscription for like using software that's about 200.
Oh, okay. 200 a year?
Mm-hmm.
Okay. So we'll just take the 200 and we'll divide it by 12 equals, and we'll put it, well, up it to $20 a month.
Sure.
And your insurance, do you have any extra insurance for your business?
The only insurance I'm paying currently is $25 a month.
Okay. And is that for everything or just for your business?
That's, well, it's my house kind of insurance, which covers.
Okay, so
Yeah.
we'll maybe put $12 in for your business, because if your business is in there, assuming your business is in there.
Mhm.
Do you take a portion for your place for your rent?
Well, yeah, see, I haven't gotten this far in business yet. Yeah,
Okay,
I'm still like
we'll
setting
just
this.
cover the
Yeah.
main expenses, the telephone or your cell, your cell.
They're about 80.
Okay. Okay, and do you have any loan payments related to your business?
Not at this time.
Okay, and do you need PPE for your clients?
Again, most of it's virtual right now. I will need different PPE going forward.
Yeah, I'll put $10 in there just as a reasonable. Okay, so now billable hours are, so the total expenses are I'm just trying to look at here, 677. I'm trying to wonder if I adjust this, Kylie might know, I don't know. If I adjust this for her average hourly rate, is it going to mess up the formula?
It might. I didn't set this one up, so I'm not sure what the formula is set up.
But there's
on this
no
one.
formula here, right? When I'm in here, 190.
So
Okay.
it shouldn't.
What is your average hourly rate, LA?
I haven't had an hourly rate. I get contract work. So it works out to being about $100 a month, which I know is not the best, but
$100, like, I'm just going to see if that adjusts it. Yeah. So if it's $100 an hour, roughly, then that's 7 hours you'd need every month just to cover, that's just your hard expenses that you're paying out. Now, if we put an owner's salary, and let's just say 2,000 in here.
Wow, really?
I'm generous. Then you'd need to work 27 hours a month. So 27, I like to I don't think this is accounted for time that's down. You know what I mean? Like, so I like to go 27 months times 10 months, because that's about all you get to work is 270 hours. 270 hours, say a year. And then I divide that 270 by 40, because 40 weeks. So actually it comes out to about 7 hours a week that you would need to bill at
Last
100.
calculation.
Yeah. But if you say you wanted to put your income at 3,000, then you'd need to work 37 hours a month.
Okay.
And yeah, it's an important thing to really look at the hard costs rather than a guesstimate, or just wondering what the market will bear. Okay. Yeah.
Thank you.
Are there any questions on that example? I can bring it up again. But it's a really cool sheet, because you can put all these figures in. And
Elizabeth, a question about this. So if we have actual numbers to put in, like
Yeah.
I am starting out, so I have some solid numbers, but the other ones I need to guesstimate. Is that a fair assumption to put that in when starting out?
I like to do that because, like I said, it's easier to bring your price down rather than raise your prices. Although when people are really thrilled with your services, I mean, I noticed when I've raised my prices along the way, I've never lost a client. When you a service-based business, people like working with you, and if they have a history with you and you give them lots of notice, like I like to raise my prices either in September, because we've got that mentality for going back to school, or January. I prefer September myself, because January people have a lot of costs associated with Christmas often. And so I'll tend to raise my prices in September, but I might tell people in June, in September, I need to raise my rates because I've got new expenses. And then they are prepared for that. And sometimes I'll even say to them, I'm raising my prices in September for new clients, but I'll keep you until December. I'll keep you at that rate. So they feel like they have an advantage to work with me till the end of the year. And then, and then after that, then it goes up. But I've never lost a client with an increase in rate. And one of my customers, in fact, he was a farrier, and every time he raised his rates, he kept thinking, well, I'm sure to lose this person because they're, always crying poor. And then they'd always stay with him. Again, service-based businesses, we pay for people we know, like, and trust, right? And yeah, there's all sorts of reasons that people stay with you.
Okay, thank you.
Okay. And while we have this up, I mean, we can take a look at I guess, Jessica, you probably have a good handle on your costs and how to price your products, right?
I would say not really, honestly.
Okay.
Like I was managing the business, that was probably like 6-7 years ago. And then since then, I haven't really been in the field. Like I worked for Delico and other things. So I've been out of the area for a bit. I did find out some expenses for like my machines and things like that. But in terms of like my hydro, internet, all of that kind of stuff, I haven't really been able to. That's why I'm kind of here to try and figure out how to figure that out for my business right now.
Good. And have you also been talking to Lori about if there's any grants or?
Yes.
Okay.
So I did apply for the starter company one yesterday. And then she sent me a few other things to look at. So that's part of why I need to figure out kind of like a projection basically, so that I can apply for some money to see if it'll help me out.
Okay, yeah.
Yeah.
So you'll use this sheet. I'm just trying to I think there's also, I've forgotten your name, there's somebody who's manufacturing the silver,
The
Devarti,
jewelry.
Devarti. Maybe she's stepped away from.
Yeah, no, I'm here.
Oh, good, cool. So you're manufacturing your product yourself?
Many of the pieces, well, some of the pieces are manufactured, some of the pieces are pieces in the in a
Putting
piece.
together
Yeah.
your
Yeah.
So you'll go through this list when you get this handout and just add these things in, and you'll get the true cost of each product, right?
Yeah.
Because sometimes we just think it's the actual hard costs of the materials where it's so much more.
Mhm.
And yeah, I think because I see that it's only about 17 minutes before we end, I'd rather deal directly with questions that you might have, try to answer any questions, and then use that form and work directly with your BGA, your business growth advisor, to go through it. Okay, if you have any questions. Ibrahim, I think you were asking a question, or Edna, sorry.
Yes, please. I thought you were going to go through the retail side.
The retail side?
Yes.
Yeah.
Because I deal in African fabrics and, I bring in, so I think that's my side.
Right. So the African products that you bring in, do you have a storefront or do you sell them from your home?
I sell from home.
Yeah, you sell them from your home. So you would use the manufacturing, let's see which one it is. Yeah, you'd probably just use this manufacturing one because you've got the actual costs of your raw materials here and your packaging and shipping and that sort of thing. And if there's any credit card fees. So when you get this handout, you'll find out all your expenses in here.
Okay.
Yeah, I'm very interested in your product because I know you order a whole bunch at once and
Yes.
then sell them, and you may be underpricing because it's tempting to say, okay, that whole shipment costs this, and equalize it over all the pieces of fabric. But there's so many other expenses to consider when you're doing that, because you get left with, well, even your owner's salary, right? And you get left with a lot of the business expenses that it costs to run your business, like your accounting or your advertising, your bank charges, all these things. So please go through this sheet and, ask your business growth advisor for help to break it down if you have any difficulties, okay?
Okay, can I discuss? Okay, I don't know if I can call you later, or can I tell you how I do my pricing right now?
Yes, sure.
Okay. Yes, when I buy and ship, I total the cost of buying and the cost of shipping until it gets to my apartment. All the
Got it.
costs. So all the costs of shipping and clearing and bringing down to Ottawa to my doorstep, I divide it on the number of fabrics I brought in. So
Right.
then I know how much each one costs. Then I put my price. So at the end of the day,
So let's say that you divided it up. You're
Yes.
buying and you're shipping, and it comes to your house, and you divide that. Say you have, I don't know, say it costs $500, and you have 100 pieces. So you say, okay, this is $5, I think. I don't know. But let's say
No,
that,
Okay,
let's say
the
the,
costing, the buying separately, then the shipping and other expenses separately.
so
so-
you think about your last order and how much was that total cost?
The total cost is like $25 each.
Okay, that's a perfect example. So the total cost just to do the shipping and the handling
Yes.
and the product was $25 per piece.
Yes.
But you have all these other costs, right, that you need to consider. So at the end of the year, you have to do your you have to do your income tax. So you have cost, like say it costs $200, you divide that by 12, you have a cost for your bookkeeper or your accountant. Is there any advertising costs? Maybe you do an ad on Facebook or Instagram. You know, do you have a separate business bank account? There might be bank charges. And you want to make some money for doing this, right?
Yeah.
And then, you know, do you have any other people helping you with the shipping or
No.
whatever? You know, your
No.
car, when you go and drive to deliver your fabrics, you know, that costs if you're not shipping, right? And, you know, you have to like consider all these things, your cell phone, you know, your different, you might have a loan. The raw materials are just one cost up here in your variable expenses, but you have other expenses. And especially, so if you sell those fabrics at $25, you're not breaking even, you're actually losing money because it doesn't, you
Yes.
haven't put money in there to consider all the other small expenses in your business.
Yes, I have
And,
explanation for that, $25. After everything, after I put pricing, at the end of the day, I calculate how much I realized in a month. Once I'm able to take out, you know, once I realize my buying and shipping and every cost, I put the remaining ones on sales as my profits.
so how much do you sell them for regularly?
I sell one regularly for $35.
You sold one to where?
For $35.
Okay. So,
Normally.
okay. So do you feel that you make some money on that?
Yes.
Okay. How many do you usually sell a month?
It depends what time I sell. Like the last one I brought in July 1st. I sold up till last week. It's remaining like 28. I brought 102 pieces, and up till last week, it's remaining like 28.
Okay, so you sold 102 pieces at $35. Okay, and you have 28 left. Okay, and what was your total cost? It's $25 times, okay, 130 was your total absolute cost. So it cost you $3,250 to bring in that shipment.
Yes.
And so what you've sold now is 3,570. So you've only made $320 on that shipment. And over how long is it?
1 month.
1 month. So is your work in all this month, is your work worth more or less than $320?
More.
Yes. So, you know, you need to raise your prices. So what are you seeing in other stores for the beautiful fabrics that you're bringing in? What do you see them selling at?
I saw market because I sell on Facebook Marketplace. I saw that people sold for $40 and $50.
Yeah, I think $40 or $50 is more realistic to feel like you make a little bit of money and that you cover those other expenses that we've talked about. But we'll talk further about this once you fill in this example for me, and then I'll personally talk you through that so that you can better understand how you need to make more money, right? For all the effort, like picking the fabrics, arranging the shipping, doing all that paperwork, you know, managing the order. That's just part of it. Then you have to, I don't know, are you mailing these fabrics or delivering them?
I deliver by myself, and most times I mail it, but they pay, I charge for that separately.
Yeah, that's great. And do you charge a shipping and handling or just the straight cost of the shipping?
Just the straight cost of the shipping.
Yeah. So that's one easy fix, is that to make a shipping and handling charge. So they know that you packaging it up and mailing it to them is also a charge. So, you know, if your typical charge, I don't know, let's say it's $12. I have no idea, but I would put that up to $20, saying shipping and handling.
Okay.
Yeah. So is there another question? I realize we've got 8 minutes.
So we have the room till 11:30. So
Oh, pardon me?
we have the room technically till 11:30 because there's no second webinar today.
Oh, okay. So yeah, we're at almost 12. You're in Thunder Bay, right?
Or so yeah, 12. Sorry, we have the room to 12:30.
My
I need
brain
more
is like,
caffeine.
are you in Kenora?
This cup is
Okay.
not big enough. It needs more caffeine.
Show them your cup. I love this cup. Size matters.
This is
You
half
get it.
a liter. I've had 2 of these. I'm going to go get a third shortly.
Yeah, have a glass of water in between, says the mom.
No. There's water. It's tea. It's mostly water. Anyway,
Okay.
we do have another question from LA. How do you
Great.
determine an owner's salary, especially when starting out?
Oh my gosh, that's a crazy question. I don't know, LA. Yeah, I was gonna say, I mean, I help people if I'm working with a client, I help them take a look at their skill, you know, their level of expertise, where they are, what the competition is. I mean, honestly, what you're willing to work for, right? When I work for from a service-based perspective, because you're a service-based business,
Mhm.
when I work for my private clients, it's $400 for 2 hours of my time. But that takes into account that I'm marketing to find those clients, that I'm meeting with them usually for a tea beforehand and doing an assessment. And I'm also telling them, okay, well, we'll work together for 3 months or we'll work together for 6 months. I'm giving them a customized service. And then I start working with them. So for them, $400 seems like it's logical because, you know, I've put all this time up front. And then of course I have to pay for running my business, right? I have to pay somebody to do my social media, etc. So there's all these expenses that are obvious and also hidden. So I figure a third. So if I'm charging $200 an hour or $400 for, I just chunk that into a third. And that's what I'm actually making. Now with PARO, I've got a year-long contract. So that pricing goes out the window because I don't have to market. There's no real extra costs for, the running of the business because I'm, already doing that. So, they get a much better rate because there's not all those hidden costs. I'm just showing up on my, in between my private clients. I'm just making appointments with PARO clients that are in between my other clients. And it's a very flexible work situation. It's still a contract, but it's nowhere near the $200 rate. And then, like you said about contracts, sometimes if somebody brings me in to do a workshop, you know, there's a real scale if it's a not-for-profit or if it's an organization, you know, like PARO that I believe in so wholeheartedly, or if it's another agency that has a huge budget, you know, I price accordingly. And the last thing around that is escaped my mind, but you know, it's just what you need to pay the bills, but it's easier to bring your price down or say to a client, like when COVID hit, I said to all my clients, like when end of March came and I would bill in April, I said to my clients, well, until this is over, like a couple of months, I'll continue consulting with you at no fee. Little did we know that this would be so long. So when June came, I said, okay, let's take the summer off and then we'll resume in September if you want to. And some of the clients came back and some didn't. And it was June last year when I started with PARO. And then I've, you know, combined the two. But it is what you can survive on, right? What you don't want to survive, you want to thrive. So pick a price.
I've been surviving on very little this entire time. I've taken on a couple of contracts. One where I said what I didn't think it was exaggerating for the price that I was asking, and they counterbalanced with, they'll sign for a year, like they'll contract me for a year, and they would pay me half the rate monthly. And so I was in a tight position, one, that I needed to have some work coming in, and two, I'm in a blessed position where something better to help them was helpful, not only for them to thrive, but it took the edge off of not having to suffer also on my end. So I did take that contract. We're about a quarter of the way through at this point. It's been going well. However, there's way more work on my part, like you said, like the background stuff. And every couple of weeks, I kind of kick myself because there's so much extra work that I have to put in versus.
Are they extra hours over what you anticipated?
Correct.
Yeah. So I would bring that to their attention. Like if I was doing an invoice and I would put how many hours I worked and how many hours I'm billing for, and say that we're going to revisit this. And I would pick a time, like here we are mid-August. I would say in September, we're going to have to renegotiate the contract because there's extra hours.
Yeah, they've paid out the whole 1-year contract.
Right. Yeah. Well, you need to talk about these extra hours, right? You need to discuss them at least. It honors what you're doing, right? If they have no awareness that you're doing these extra hours, then you know, it's on you, right? You need to bring them into awareness that you're doing.
They brought it up. I was not going to complain about it. They brought it up in our conversation this week, and said, wow, you're really doing a whole bunch of extra things that they did not account for originally. And then the comment was, wow, but I don't have to pay you anything extra because we're doing this for 1 year. And I said, yep, it is for the 1 year. And again, it wasn't a begrudging conversation or anything like that. They've noticed that I do the extra work and that I've stepped up. Maybe they'll re-sign once the contract is over. We'll see.
Yeah, that doesn't seem fair to me, that you are, I mean, I'd have to know the actual numbers and I don't want to bring that up in a public forum, but it doesn't seem fair to me to do that. But I guess I would start looking for how, obviously they're thrilled with your service, how they can refer you another client at your regular rate and tell them, I don't want you to talk to the client, the referral about your rate, your special rate, because we both know that that's very special, but I'd like you to try and think about who else I can help. That's what I ask people all the time. Who else can I help? And then also I'd get on LinkedIn, I'd get a testimonial from them. You know, you can ask for a recommendation, I think they call it on LinkedIn. And so you can go to your LinkedIn profile. You know, do you know how to do that, LA, and ask for?
I don't have, and they're not online.
I see. Okay. So get a written testimonial, like ask them to write you a written testimonial that you can use somewhere else. You can't use it on LinkedIn, but if you are presenting to another business owner, you can say X, Y, and Z absolutely loved our contract. Because yeah, I'm sad to hear that you had that conversation and that you deferred to that, you know, that it's still, if it's called outside scope, if it's outside the scope of the contract, then you need to have that discussion. I always say, put your big girl pants on and have that awkward discussion yeah. And so the thing, I mean, I even feel that I would if I were in your shoes, I would revisit it and say to them, you know, in September, I'd like to have another conversation about these extra hours, because I'm realizing how many, and you can say, okay, I don't know what it is, but say 5 hours times 50 weeks for the whole year is a lot of hours, you know? And so I want to be fair to both of us.
Okay.
Yeah.
I think that's going to be the conversation as it left this past week. Like I said, she was very excited that I did all this extra work. And there is an opening for another discussion. It just did not happen this week.
Yeah. And it's so true. Like people who like to help, like service-based people especially like to help. I mean, everybody likes to help, it seems, women, but we want to give away everything, and then we don't, we can't stay in business.
Right.
So that's a reality.
And in fairness, part of that was the contract. I needed a contract. I was looking for one. And this was, like I said, I was in a blessed position at the time to take that on at a very special rate.
That's great. Yeah. And as long as they're clear on the special rate and the contract stipulated what you were to do, you're in all rights to go back and say, hey, there's all these things that are outside of the scope of work that we discussed.
Okay.
And, you know, these are how many extra hours. How are we going to handle this, you know?
Thank you.
Okay, my pleasure. Melissa, you've been so quiet. Do you have any questions? Okay. I can't hear you. Sorry, you're muted.
I'm just absorbing, taking everything in. This is great. Thank you.
Perfect. Chantel?
Yeah, same thing. Absorbing it all. It's been great, Elizabeth. Thank you. I learned a lot for sure.
Okay, thanks. And anybody else? There's a Michelle here. I don't think I've seen you yet. Are you getting what you need from this? Oh, Michelle is muted.
Actually, Elizabeth, one thing, I don't think you dropped the Excel sheet into the chat for everybody. Elizabeth, if you just send it to me, I can email it to everybody.
Okay, thank you. Yeah, again, then it'll be there.
Yeah, anybody that wants, again, today's recording or part one, I know I've already got a couple emails from everybody, from a few people. If you want a copy of today's recording, part one, and as well as the Excel sheets, again, send me an email and I'll send them off to you later this afternoon.
Okay, and just to recap the beginning of the conversation, when I was saying about the emotional relationship you have with money, you know, if you're somebody who's always found it hard to have extra money in the bank account, it's really important for you to come, you know, face to face to do some work on your emotional relationship with money, because it's being in business is about making a profit and having that profit. The easiest way I can think of to help you is that, you know, don't undervalue your worth as a skilled service provider, a skilled bagel maker, a skilled, you know, whatever, silversmith. Don't underestimate your value to your customer or to the market. And also, I mean, it's always great to, if you're new in business, to have that rainy day fund. I have money, like I put 25% of any check I get, I put 25% in another account. And I know that I'm perfectly prepared for my taxes and a vacation. That's how I do it. Everybody else has a different way to do it. But it's really important to me. Like if my brain and my body are all I have as a service provider, I have a couple of books and, you know, that sort of thing. But if something were to happen, like actually a couple of years ago, I fell and I had a concussion. And I had to cancel because I couldn't be on the computer or my phone or anything. And I had to cancel a couple of speaking engagements that would have brought in $3,000. And I luckily had, you know, that buffer to use until I rebooked those for the time, you know, that the doctor guessed that I would be well again. And it worked out luckily, you know, but sometimes it doesn't work out. And, you know, our health directly impacts our business. So be prepared for that rainy day fund. And I have also all my clients, I ask them to figure out what their monthly, I call it nut, but what your expenses are to live your life, right, for a month. And then have that in a savings account. It can be in a tax-free savings account. It can just be in your savings account, so that you are not going crazy when somebody's not paying you. So, I mean, for instance, I did like 17 workshops for the city of Toronto. And then when I went to collect this a couple of years ago, actually, when I went to collect, because I billed them, I billed them all at once. And when I went to collect, it took them 120 days. For a major corporation, that's nothing, right? But for me, as a small business owner, that was a big chunk of money. And they took that time to pay me, and I was following up, and, you know, it was crazy. Oh, thanks. That's a great question. 1 month of your nut or 3 months? 3 months technically, but because I operate with that 25% also in a savings account, like I have in my regular savings, I have my month, but I'm putting 25% into my TFSA, my tax-free savings account. So when I earn interest on that money saved up to pay my taxes at the end of the year, it doesn't go into my taxable income. So I have sort of two savings account. Yeah, but 3 months is better. If you can get that going at the beginning of a business, please do. It's just so important because things come up. I mean, when my father passed away, I had to take some time away. I really had to travel and just feel like I had not a care in the world because I had taken care of him for such an extended period of time. And before that, my mother. And so I just went on a 9-week trip that with a backpack. And it was crazy fun. And it let me feel, you know, that I could come back and buckle down and get back to my business. But I had to have that rainy day fund to take off for that time. And I saw a comment that said 10% aside for equipment. That's fantastic. When you can do that, I don't do that in such a methodical way, but it's great. I mean, in November, just before I was to do a major presentation, actually two major, one a 4-day presentation and one was a major presentation. My computer, the motherboard died, like absolutely died. And so, I had to go to the computer store and just put on my credit card. Like there was no question. This was just happening. I had to have a computer. And when I went to the Geek Squad, they said, oh, it'll take a week because your motherboard died. It'll take a week to get your information from this computer over to that computer. But my only problem was it was a Sunday that I bought it. My presentation was a Thursday, and then I had a 4-day, Thursday, Friday, Saturday, Sunday. What did I call it? A summit. I had a summit going for 4 days. So I had to find a private person to transfer that. And he had it running 24/7. And he was able by Tuesday for me to have all my files back. So needless to say, it was a stressful week to go Sunday to Sunday. Money was the least of my worries at that time. And then I dealt with money. And, luckily I did have, like I said, the savings account for my taxes that I could use. And it was November and I was able to build up that money before the money was due in April, right? So, it's just always cash flow is a real management skill that you manage best when you deal with buffers, And Jessica, I just have to tell you this funny thing. I went and toured the Ben and Jerry's ice cream store, I think in Vermont, maybe, or yeah, I think they're Vermont. But anyway, I went and toured the factory, and they say that when these guys, I think they met, I forget, in high school, and but one of them wanted to start. All they have is their high school education. One of them wanted to start ice cream making company, and one of them wanted to start a bagel making company. And the only reason they're in ice cream is that the ice cream maker was cheaper than the bagel maker.
Yeah, I no doubt. Yeah, I was gonna say the oven alone for making bagels. Well, the bagels I want to make is pretty expensive. So, but that gives me hope that I can maybe become the Ben and Jerry of bagels one day. Who knows?
Absolutely.
Who knows?
I think that's a delightful story, though.
It is,
yeah. Anyway, are there any other questions? Devarti, did you have a question? Okay.
No.
Well, feel free to ask your BGA, your business growth advisor, for any other guidance. And if you need help, I'll pop on a call with your business growth advisor. But I think they'll probably be able to sort it out for you. So thanks so much for your time and attention today. It's been a blast.
Thank
All
you.
right. So thank you everybody for coming today. Again, if you would like a copy of the recording for today, or part 1, as well as the supplementary documents, again, contact me at communications@paro.ca. And everyone have a great day.
Okay. Thanks so much.